Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is check out the Elliott Wave principles, so the strategy that I'm following, that you can read online for free when you use the link in the description down below. That said, let's jump here. We have again a slightly break-even start into the day. So today with a slightly red touch for the beginning of the day. As always, we're gonna go through my current positions and then we're gonna see if we can find something else that's interesting. My biggest position, for those of you that are new here, is our 600 GameStop shares that we got mostly by trading the wheel, so by selling cash secured puts until we eventually got assigned, and then selling covered calls, and there we then switched to a so-called buy-write strategy, which means, or write buy actually, which means writing covered calls against our shares and then using the premium to buy more shares. Additionally, outside of that, pretty much every position we hold in this portfolio is funded by cash secured puts or covered calls that we sold on GameStop, outside of the starting capital of around 10,500 euro at the middle of May. Our performance for this year so far is around 75%, so since the middle of May, and with that, quite impressive. Now let's jump into the markets. Oh, I forgot to start Motive Wave, so we'll have to wait a moment for it to fire up fully. And there we go. So GameStop, nothing changed since our last week's analysis of the whole thing. Quick summary, I'm not 100% certain about the labeling here. I mean, we can obviously see we made a new high here, and we're probably gonna get a 1, 2, 3, 4, 5, another push here, which most likely means that this orange wave 3 actually will be somewhere here. Either way, or despite that, if that orange wave 3 is somewhere here, let's see where we would have the next target. So let's reset that one to a regular extension. And then we would have the 500 instead of the 400. So, oops, that one we want to keep. So that would potentially be the target area for whatever push there is still to come. So 30.75 to 31.31. And then when that happens, that should then theoretically mark the end of this third wave move, and additionally then provide us with wave 4 downwards. Now let's double check Kennedy channeling technique here real quick. So we have our starting point, wave 1, wave 2. Which gives us our base channel. The moment we have our breakout from here, we have our so-called acceleration channel, and we can then pick whatever high we have. So if we were back in October, we would pick this high parallel through wave 2, and if we would have a breakout to the bottom of the channel instead of getting a new high, then we would know or assume that we're in the fourth wave. Now we don't get a breakout here. We move on to this high. Again, we have to adjust this to be parallel through point 2. We don't have a breakout here. We move on to, in that case, the next high would be this one here. Again, parallel through point 2. We have a candle that goes lower, and which was the one thing that that probably is the reason that misled us in quotes. So we'll have to get rid of those labelings here right now. But the candle doesn't close outside. So considering the movement that we had since then, it actually did not mark the end of wave 3 from the looks of it. But instead, what we probably have is 1, 2, 3, 4 might be dragged out till here, or might still count here. So labeling the subwave, and then wave 5. So which means then here we also didn't have a breakout so far, but we also didn't have a new high. So right now our acceleration channel actually still looks like this, and we either wait for a new high to move the tip or for a breakout to the bottom. Now, considering the extension levels, again, I would assume that that fifth wave makes it up till here. If we now update this, again, I now have reason to believe that this is 1, 2, 3, 4, 5, which means wave 1, wave 2. So our wave 2 point goes here. Wave 3 would then be 1, 2, 3, 4, maybe with a truncated fifth wave, so maybe like this, and then our wave 5 targets actually would then be like this, and we can see that we get a nice overlap in that area here to basically finish this 1, 2, 3. Then we get a wave 4 that should bring us down below 30 again, and then we get a wave 5 push that actually brings us potentially to the 261 extension level for this bigger move. That's from further before. So that's the situation here right now. So from the looks of it, I said we're still missing 1, 2, 3, 4, 5, at least 1, maybe 2 pushes. It's possible that the wave terminates here, and if we use Kennedy channeling technique, again, we just have to wait. Either we get a new high and we have to move our channel, or we get a breakout to the bottom that actually has candles closing outside, and we know in quotes that we are now in wave 4, but we'll have to wait and see how this plays out. For me personally, I'd obviously like if we stay below 30 the entire time, because then I have no risk that my shares get called away. If they get called away, it's still fine because we still made decent profits through all the option premiums. And if we now get a push a little bit higher and then we get our corrective wave retracement, that would also work out fine for me, because it's very unlikely, or it's less likely that whoever bought the calls from me that expire in January here, that person will exercise them here already. And if we then fall below 30, they might actually, as said, definitely not exercise them, and then we would get our wave 4, and then followed by our wave 5 that would then ideally also take some time to play out. So ideally, I would assume that we might retrace as low as 23. So again, while short term, there is still room to reach the next 38.2, 61.8 extension level. After that, I expect that we'll get our corrective wave 4 down, and then after wave 4, we get our wave 5 up. And so far or so much about GameStop. Barnes & Noble Education, yesterday we basically, yesterday we basically moved up a little bit and then retraced. So we gapped up and then retraced. We still believe that we ended the correction here around 840. We increased our position at 845. Our average is around here, as you can see, because we also entered here somewhere already under mislabel, or based on a small mislabeling from my side. And we'll have to wait and see if we either break the 941 to the bottom, which would be quite bad for how I believe this currently will play out, or if we go up further from here. Either way, we got in here, we got in here, we got in here, so we actually picked good spots in all situations, in my opinion. So the question will be how it will play out. Overall, our profit targets there stay unchanged. They're somewhere high up. I mentioned them. I'm gonna open the prediction sheet 1 second. And what did we say was our profit target here? It was 1419 to 1977. So that's for Barnes & Noble Educational. So again, as a summary, in Barnes & Noble Education Inc., we have potentially wave 1, 2, 3, 4, 5 to finish the wave 1 impulse wave up here, followed by a 3-wave A, B, C corrective pattern, followed now by potentially the next 1, 2, 3 impulsive pattern upwards, which gives us profit targets between 1419 and 1977 on the, in quotes, pessimistic side. For long positions, stop loss would need to be either at the low here, so at 880, or better at the low here at 831. If we break 831 to the bottom, it would indicate that we have a combination of corrective patterns, so A, B, C, and then followed by another A, B, and C, in which case the 78.6 retracement would be the next point to, in quotes, try to catch a good entry, with then the stop loss at the low that we had here that was at 605. So that's about Barnes & Noble Education Inc. Moving on to Grab. Grab is again moving a little bit. I think everything's unchanged here from last Friday, since we're looking at a weekly chart. We're still in a situation where either we're proven right, but for that we will have to wait to break the 781, or we're proven wrong and this turns out, instead of being 1, 2, 3, 4, 5, to be A, B, C, and we get 5 waves down. Considering the movement so far, I think we're going to be proven right, and our call option that expires in January 26 is actually going to print nicely. And with that, we move on further. Immersion still unchanged. We're waiting to have a strong move up and be proven right, or a correction down below the low that we had here at 817 and be proven wrong. Costs, we're still in the same waiting game. So again, we need a breakout either to the top at 879 or to the bottom at 652 to know, or to have confirmation of correction over with this 3-wave move, and we are getting another impulse up, or correction not finished, and the 61.8 retracement would be our next potential point to increase our position. Moving on to NEO. NEO we've called quite well recently. I mentioned that it's possible that we got in here, we got out there, and now we would be at the 78.6 retracement, which also is below the minimum target that we expected for this retracement. However, I pointed out that visually it's possible, because that looks like 1, 2, 3. So it's possible that there is wave 4 and that we still get a push a little lower. Might play out like this. Our entries here around the 78.6 retracement, I think, are still not that bad. We only hold 100 shares, so our exposure is around $450. It's not the end of the world if we turn out to be wrong here. I think still this is a good area to entry. Yeah, stop loss would need to be at 368. Or if one wants to play it safer, then at 363, so safer in terms of the pattern. So obviously there is some risk involved with being wrong. However, visually this looks like almost perfect 1, 2, 3, 4, and then wave 5 push. And wave 5, as we can see, based on the recent low, should bring us to 681 or up to 904. Potentially also higher, but that's what the current pattern would suggest. Again, we'll have to wait and see if we how it plays out here. Our position is still relatively small. If we would break lower here, I would potentially increase our position depending on how much cash we have available that's not locked up in other positions, or I'll just wait it out. Moving on, Novavax, we're starting the upward move. Unfortunately, my options here are going to expire on 17th of January. Visually, I got this right and wrong at the same time. I identified basically this bottom and entered them. That happened very fast, entered then here by getting call options that expire in January, and I thought this would be already the end of the correction. A little bit ignoring that we didn't fully touch the 61.8 retracement, and not placing a trailing stop loss or any kind of take profit order, so that when this here happened, our options became almost worthless. We are, however, here in the perfect area, as we labeled recently, where this would be wave A, so ABC, ABC, and followed by, in that case, actually 1, 2, 3, 4, and 5, and where we have the, in quotes, expected profit targets for that to mark this the turnaround point. To be on the safe side, we would need to break the 1074 to have some kind of confirmation that we indeed are now done with the correction and should expect then 5 waves further up. We can see that there's still more than 100% to the minimum target area at 2297, and even more than that to the maximum target area that's even higher up at, I wrote it down somewhere at, no, I didn't write it down. I have still the downwards prediction written down. But yeah, the upwards at 4871. Yeah, so we would expect to get 1, 2, 3, 4, 5 to take us anywhere in that range. However, it might not happen in time and my options might expire worthless. Or if we get a little bit more upward movement, I might still be able to maybe salvage them, because then the price of those options, so if we circle back, we can see that they're currently at $197 loss, so that the price for those options might increase again to allow us to close them for a smaller loss, or maybe even for a small profit. We don't know yet. We'll have to wait and see. As said, if you consider entering right now, might not be the worst situation. You would have to place your stop loss at 681. However, you can also wait for the break of 1074. Stop loss would still need to be at 681, so there's still some risk involved, but it would be some kind of extra confirmation that we likely finish the corrective pattern. Moving on quickly into the crypto area, I want to check what XYO is doing. So yeah, looks like right now it looks promising. We might have called it right that indeed we have the end of the correction here. So we have wave 1, 2, 3, 4, and now wave 5. And then we can see the wave 5 targets are at 0.01156 to 0.01534, which is still around 40% to the minimum target and 90% to the 100% target. Yeah, we're gonna hold our XYO tokens. Those I have in Coinbase. You cannot see them, and yeah, we're gonna hold them, and we actually have our sell order, I think, already set at 11.56 or so. Not gambling for a higher move, being happy to realize the profit here. Looking at storage or storage, there we are now expecting to reach at least the 0.80 again. Actually, I mean, there are two scenarios. One is this is A, B, C, which means we would terminate in this area and then go further down. And the other one would be that we actually have wave 1, wave 2, and this is going to be 1, 2, 3, 4, 5 just for the first wave up. Then we get wave 2, wave 3, and so on. So we would have higher targets here as well. However, I've decided to set my limit order at 80 cents per token. So if we slightly below the minimum target that we would expect in the more conservative labeling, simply to yeah, like take a profit on those. If it goes higher, so that's okay. We'll find some other pattern where we can reinvest. Yeah, so that's about that. Now DJT is still moving sideways. Yeah, so again, I think the correction is over here as a 3-wave move, which means that might be the next 5-wave impulsive pattern up. We can see the targets here, but we don't hold a horse in that race, or we don't have a horse in that race. Yeah, so it's just based or just interesting to label it to see where it might go. And Nvidia, the usual favorite of so many people. Okay, there we don't have any labeling on the chart. Again, I promise we will in some episode in the near future get to relabel those things that I mistakenly deleted. Intel, yeah, we hit the minimum target for the correction for a potential ABC move. So looks like this might be 1, 2, 3, 4, and we still get a wave 5 push for 1, 2, and then further up. So might be bullish pattern here. We called Intel quite well here. Also that correction we called relatively well, although for me it was a small losing trade because I played this with put options and picked a too early expiration. Although our entry was relatively good, we decided to get the put options here, but yeah, like took till here to reach the target that we expected, and we thought it would happen a couple days earlier. Yeah, can't always be right. SMCI, yeah, there we are now at the minimum target for what could potentially be an ABC corrective move before we crash further down. And yeah, overall I'm bearish, very bearish on SMCI, but we finished with basically wave 1, 2, 3, and are currently potentially in wave 4. That might go as high as this area here, so around 45 to 55. Before we then get a wave 5 down, and then we get a 3-wave move up again, and then we get another 5 waves down to around $5 or so is what I have written down, 568. Yeah. And that's that. Now, what else do we have to look at? SPY. SPY is now, what is SPY doing now? SPY, if we get a chart. Okay, we don't get a chart right now, so we'll skip it. Nasdaq still bullish in my opinion, although from the looks of this might be A, B, and we get a wave C. So would not be surprised if we drop 300, 400 points before we start our, so towards the 20,000 mark before we start our next wave push up. And Amazon, we also I think have a prediction. Yeah, which is a bullish one, which is here 251. Although we covered that recently, it's possible that I made a small mistake in calling this here wave 3, but it wouldn't change the long-term target. It would just change the short-term outcome, because then we would expect the retracement down to potentially even 150 before we go further up. Now, I checked earlier, and if I'm not mistaken, I'm going to actually check again. So the earnings calendar, and if I'm not mistaken, CrowdStrike is among the the stocks that will report earnings today, and I'm curious because they obviously had a rough time when they shut down the internet for almost everyone. That's quite a tricky situation here. So visually we have, to the naked eye, 1, 2, 3, 4, 5, or 1, 2. Let's actually add an extension to get some kind of like opinion. Might actually be 1, 2, 3, and this is wave 4. Then the retracement here would be based on this move, because here it would also be 1, 2. So let's check this if we apply it here. Yeah, I mean, we hit the 338.2 for 1, 2, 3, 4, 5. Yeah, so might be the likely candidate here, so that this here is, so we would keep the 300%. And then we can actually duplicate that thing because we have the same thing here, and also keep the 300%. So one of them would be here and the other one would be here. And then we would be retracing this entire 5-wave move. And then on the weekly chart, there is option 1. This is wave A. We have now wave B that slightly exceeded the, in quotes, our usual maximum target, which would then mean we would now expect wave C down to that area, so to the 61.8 retracement. Yeah. Or the other option would be, for that we probably 3-day chart might already help. I'm gonna get rid of a few things here real quick. Would be that we had an A, B, and C move play down here, and in this case we would look at the next 1, 2, 3, 4, 5 upwards move. So yeah. Now one has to consider that this here was obviously a fluke, so that was not based on bad company financials or so. It was based on, in quotes, a mistake in their product that took down the internet for a bit, yeah, and cost them a lot in value over a couple of weeks. And if they report earnings now, I actually would expect bad earnings, to be honest, because I assume that whoever suffered damages from this here might also have spent the last couple of months to look for alternatives and cancel whatever contracts they have with CrowdStrike. So I'm tempted to say that the earnings will be bad. They will be announced. I'm gonna double check. CrowdStrike will be announced today after market close. Yeah, so tomorrow we should already see if they have good earnings. Then we would get a spike up, a new all-time high, and I'm proven wrong. If they have bad earnings, we would get a strong move down, which would be it will not be as bad as this, but this one would then play out slower. It's 1, 2, 3, 4, 5, and would then have the minimum target here, but that's actually not sufficient because it should make a new low, which means the target would be here, the 61.8 retracement at. I'm going to add that in the prediction sheet. So CrowdStrike, and yeah, and then the current price is 364.87, and the target would actually be 185.51. And today we have the 26th of November. I don't know how far we are in the stream and so on, but yeah, like. So to summarize CrowdStrike, to summarize this, CrowdStrike is going to report their earnings today after market close. Visually looking at the weekly chart, it looks like we have what appears to be, I'm going to label it real quick as well, wave 1, wave 2, wave 3, wave 4, and basically 4 maybe not finished, and wave 5. So 4 might not be finished. Yeah. We can also visually see that in the third wave subdivides nicely in 1, 2, 3, 4, and 5. And the question is this drop that we had when CrowdStrike took out most of the internet, is this already the end of the correction, or is this only wave A? Now, The patterns would support both. It could be that we have a free wave A, B, C move. That's the end of the correction. And we're now on the next, basically in our wave 5 move. In which case, if that were the case, then we could put expansion here from here to here, and the long-term profit targets would then in that case be between 412.70 and 661.87. Yeah, and even in quotes, if the other scenario comes true, so which is 1, 2, 3, 4, so 4 not finished, and 4 retraces actually again down to 61.8, then we would still get wave 5 targets that are in the same area. It just means that we are looking at a weekly chart that it would take a couple of years to get us there. Yeah, so yeah, let's actually, so you might be wondering why I'm doing that again. I'm trying to get moments that I can clip properly. So for that, we actually have to zoom a little bit more. Okay, so let's try this again. So looking at CrowdStrike, who has their earnings report, or which has their earnings report today after market closed, it appears to be that we have a wave 1, 2, 3, 4, 5, followed by a correction. The big question is the drop that we had here when CrowdStrike took out the internet is that, oh no, we don't have 3, 4, 5. We have only wave 3. Yeah, so again, from the top, sorry for that. Yeah, so looking at CrowdStrike, who or like which are reporting their earnings today after market close, we can see what looks to be, or what appears to be, wave 1, wave 2, and wave 3, followed by wave 4. The big question is this drop that happened when CrowdStrike took out the internet, or parts of the internet, is that the entire correction, or is this only wave A, followed by wave B, followed by wave C? Right now, visually, both is possible. We would need to look closer below the weekly chart to gather additional evidence in quotes for which case it is. However, personally, I believe that potentially some or enough customers of CrowdStrike might have canceled their contracts and looked for alternatives after this drama here. Therefore, I would actually expect that we'll get to see bad numbers reported and expect a drop. Now, if that drop will point towards a wave C, which should take us down to 100, now go to the side, to 185.51, or if it only will mark a short-term retracement is a different question, but right now I consider this scenario still very possible. However, if this is the accurate scenario, then we would not jump down or drop down like here within a couple of weeks, but it would actually take months to slowly play out as a 1, 2, 3, 4, 5 impulse wave down here to 185. The alternative is that we're done with the correction here on the weekly chart. That doesn't mean that we cannot have a short-term drop here as well, but that actually this would be the next 1, 2, 3, 4, 5 that should take us then to the minimum target that I now don't have on the chart anymore, that we can add again with an expansion. No, come on, like this. And we would have our profit targets at 412.70, so around 20% up minimum target, and almost 100% return to the, in quotes, maximum target for this 1, 2, 3, 4, 5. Additionally, we can try to apply Kennedy channeling technique to the whole thing, so might be a little tricky with the strong move that we had here, but let's stretch this out a little bit. So if we take the low 92.25, 92.26, that would be our 0.2. Our 0.1 was this. And the moment we have a breakout here, we have in quotes our confirmation that we are in the third wave. Now we have our breakout here, which means we would add our acceleration channel, which means we pick our 0.1. We pick whichever high point we have. So back then that would be this, and a parallel through 0.2. And if we have a breakout before we have a new high point, then we would assume we are in wave 4. Now we don't have a breakout here, so which means we have to move on to this, again, parallel through 0.2. We don't have a breakout. We move on to, for example, this, again, no break. We're still parallel through 0.2, again, no breakout, and so on until we eventually get here. And then here we actually would have a breakout. Okay, which means I have to revise the labeling here, because then this would be already the end of wave. Then we can get rid of which one was it? Not this one, but this one. So which would indicate that this here is our wave 4 move. So the labeling here, that can disappear, and that would actually change to be this 3, 4, and then wave 5 would terminate here at the all-time high or previous all-time high. That's low 281.40, 280.88, so that's lower. And okay, so that would be that. Then we would have our deceleration channel, and let's check our destination channel. that would be based on 0.2 and parallel through 0.3, and we get rid of the other channels for now, just so that it's not too cluttered. So yeah, and we slightly miss our target. So using the Kennedy channeling technique with our destination channel, we expect the fifth wave to actually touch the median or the top. We fall a little bit short, minimal of the median here, but it seems to be sufficient, which would point towards the following, that we're not retracing this here, but we're actually retracing this entire move, in which case we retraced almost exactly 50%. So we missed it by 50 cents or 51 cents. The low here is 51 cents shy of this here. But it doesn't change the forthcoming prediction. Again, we can maybe we zoom in. Daily chart might be, yeah. That doesn't make it much clearer, because visually on the daily chart that is a 5-wave move down. So some kind of 1, 2, 3, 4, 5, which would point towards this being then a part of the correction, and we should actually get a further move down. So looking at this and taking it again from the top, so if we look at CrowdStrike, who are about to report their earnings today after market close, I believe that what we are looking at is an Elliott wave pattern that looks like this: wave 1, wave 2, wave 3, wave 4, wave 5 at the all-time high, where then CrowdStrike took out parts of the internet to lose a lot of value and retrace almost 50%. It fell short by 51 cents here, and yeah, followed by the recent recovery. Personally, I believe from the looks of all this that this is only wave A down, followed by wave B, and now that we're still getting a wave C that should then take us down again to, actually I have to update my target area here, but should take us down to yeah, 109.69 and potentially lower. Let's actually quickly add the maximum target area. Yeah, so potentially, no, I'll stick with, in that case, the 61.8 retracement, 161.30. So that would be what I expect to happen over the next couple of months, since we're looking at a weekly chart, or actually years. So while this here only took a month to play out, that here already took 3 months to recover. So I would say anywhere from 3 months to a year to get us down to the 161.30 mark here. If I'm wrong, yeah, then obviously this was the entire correction, and we're about to get a very, very strong bullish development further. Time will tell. We might not see this week alone, but in the next couple of months we should already see. If we make a new all-time high, then I obviously, or most likely, was wrong. Yeah, so if we go above 440, then I definitely was wrong. But right now, based on this picture, or based on what I see in front of me, I would say that this is wave 1, wave 2 not finished yet and should retrace. We also have to consider the lengths in relationship. Here we go from 2022 to 2024, so almost 2 full years, which means the correction cannot or should not be finished in just 1 month, but should potentially take at least also, yeah, like not 2 years, but should play out over a reasonably longer time. So if the whole thing here takes 1 year to play out, it would also work relatively well. So again, my prediction is that we go down to 161.30 here with CrowdStrike. Until when? Hard to say. Would say, yeah, 26. So maybe early 26, maybe later, but so that it visually makes sense. I think today's earnings might prove me wrong already. Right now, shorting it might not be the worst idea. One could place the stop loss at the recent all-time high at 398, so it's like 10% risk, and the potential reward would be basically a 50% drop. So it's a 1 to 4 risk-reward ratio, so not too bad. Might even be possible to trade this with options in a nice way. So trading option strat, and we would go to, what did we say, CrowdStrike, and we would say our target would be 161.30, but our target would also, I would need to go quite far out, so January 27, and we see that, yeah, so there is nothing that offers a really great ratio. Best thing would be 390% potential profit by yeah, selling the $170 put and buying the $240 put. So we basically make some money back by selling the $170 put, and on the other hand, profit from the downward move if we fall below 240. But that's too expensive. So that would be like 10% of our current portfolio size for one bet. Not for me, but I think that's how it's going to play out. So yeah, and I guess we're going to see tomorrow. So I'm going to keep CrowdStrike in our monitoring listing here. And if I forget, then please remind me tomorrow that we look at what happened. Even though we don't have a horse in the race, it will still be nice to see how it plays out. We can also, if we zoom in closer, yeah, we don't get a, oh, we get some kind of picture here. So, yeah, we're exceeding our 100% target a little bit, but it's still okay. So it could be that this is a set, basically wave A, B, C for wave B, and now we should potentially get our wave C down. Yeah, one other thing we can double check here is obviously I hardly use them, the overlapping moving averages. But if we look here, we have something that looks like 1, 2, 3, 4, and 5, followed by, and here it's a little trickier. Yeah, here we only have wave A and then wave B, and we still should get wave C. Yeah, so the moving averages also point towards we are still missing a wave C here. So yeah, so without knowing anything else about what the company has been doing the last couple of months, and only really knowing that back then they knocked out parts of the internet, based on Elliott Wave Theory alone, I would say that we are probably going to see bad earning results, and are over the next couple of months and years slowly going to make our way down to 161.30. Time will tell if I'm right or not, but yeah, like that's my verdict here. And with that, we actually can call it a day. Circling back to GameStop for a little bit. So we see that we, for now, broke the $30 mark. Yeah, as said, our target area, we touched the 538.2 extension level here, which would be based on, where do you come from? Based on this 1, 2, 3, which is the next wave 3 target area. I'm not fully happy with the development of this, but this could be ending diagonal, which would then be a 3-wave move. No, actually, it would still be a 5-wave move that subdivides into 3 waves, 3 waves, 3 waves, and then 3 waves and 3 waves. So I would expect that even if we retrace here a little, that we still get another push, but potentially would call the 31.31 target the mark where we might get our turnaround. For now, it would look like this, but again, still a little bit more upwards movement possible. And from there, I would then expect to set a wave 4 correction. Now that we made that new high, we can also adjust our acceleration channel. It would look like this. And again, we are currently still expecting potentially a little bit higher movements, and then eventually our break to the bottom to confirm wave 4. That should then retrace at least 38.2% from whatever move we made, from the low point here to whatever high we have where we start the turnaround. Like the interesting question will be, will I get my shares called away? So whoever bought my January 17 $30 call options, will they get excited and exercise them already? Which makes no sense whatsoever, because it just means that suddenly they would have the shares, and potentially, depending on or considering the premium they paid, they actually need to reach around 34 to be in profit, so they would still exercise it at a loss. But yeah, we'll have to keep an eye on that. Personally, while long-term I'm super bullish on GameStop, short-term I said I expect or hope that it plays out at the way I see it, which would mean going up, getting wave 4, then getting wave 5, and with some luck, wave 5 doesn't cross the $30 mark before our options expire, which would allow me to pocket the entire premium while still keeping the entire 600 shares as well. We're gonna call it a day here, so thanks for stopping by. Don't forget, if you took something or if you were able to take something away from today's stream, like, subscribe, enable notifications. And with that, I'm going to see you then tomorrow again around 5 minutes before market opens for another episode of Daily Market Mastery. Till then, bye-bye.